What is the National Flood Insurance Program change effective April 1, 2016? Certain pre-firm lapsed properties will no longer be reinstated with subsidized rates. The Biggert Waters Flood Insurance Reform Act of 2012, or BW12, is legislation to eliminate or reduce the pre-firm subsidized rates to help make the NFIP more financially sound across the policy base. About 20% of NFIP policies are in this category. To understand how the BW12 changes rates, visit FEMA.gov. You'll learn who pays subsidized rates, how and when increases will take place, and the timing for elevation rating. Section 3 of the Homeowners Flood Insurance Affordability Act prohibits pre-firm subsidized rates for any policy under the NFIP that lapsed in coverage, unless the policyholder decided to allow the lapse because the property was no longer required to have coverage. Starting on April 1, 2016, FEMA will no longer allow pre-firm subsidized rates for policies reinstating coverage for pre-firm buildings previously insured by the NFIP, where the NFIP coverage is reinstated by means of a payment received more than 90 days after expiration or cancellation of the policy. A policy will not be eligible for pre-firm subsidized rates as required by Section 3 of HFIAA under the following conditions. The policy reinstates coverage on a building previously covered by an expired or canceled standard flood insurance policy. One or more of the named insureds on the new policy was either a named insured on the expired or canceled policy or had an ownership interest in the building at the time the policy expired or was canceled. The policy was reinstated with premium received more than 90 days after expiration or cancellation of the policy if the named insured maintained continuous coverage on the property from April 1, 2016 to the prior policy expiration or cancellation date, or more than 30 days after the prior policy expiration or cancellation date where the named insured has not maintained continuous coverage on the property from April 1, 2016 to the prior policy expiration or cancellation date, and the policy expiration or cancellation was for a reason other than the following. The insured was no longer legally required to obtain and maintain flood insurance, or the insured property was in a community that was suspended from the NFIP and the policy was reinstated within 180 days of reinstatement of the community as a participant in the NFIP. What is different? Certain pre-firm properties will no longer receive the subsidy when they return to the NFIP if they meet the conditions explained above. What remains the same? The 30-day grace period remains for those policyholders who pay within the first 30 days following expiration with no change to the effective date. After the 30-day grace period, but within 90 days, coverage is reinstated with a 30-day waiting period, with no coverage for a loss during this interim period from policy expiration date to reinstated date. What happens if the named insured purchases a private flood insurance policy? A property covered by a non-NFIP policy purchased on the private market for the period longer than 120 days after NFIP coverage has expired is considered to have lapsed from the NFIP, even if there is no period of time that the property was not insured for flood damage. To come back into the NFIP, the policyholder will need to obtain an elevation certificate, EC, and may have higher premiums than they did with their previous NFIP policy. What does this mean for agents? Agents must understand that flood insurance rates may be significantly higher if policyholders allow their flood insurance policy to lapse and then want it reinstated. An elevation certificate, EC, will be required and can be costly. In some areas, they are more affordable, starting at $150 to $200. In other areas, they are more costly and can start at $1,500. Because the EC helps calculate property-specific, full-risk rates, this rate could be lower than the subsidized rate. In some cases, the EC could potentially lower the premium. However, full-risk rates are generally higher and are often significantly higher than pre-firm subsidized rates. Download this helpful FEMA's FHIAA fact sheet to find out who needs an elevation certificate and why. What does this mean for policyholders? Policyholders will see an explanation on their renewal bill that highlights these changes and potential impact. Policyholders with certain pre-firm properties that submit renewal payment more than 90 days after expiration will be required to get an EC for a policy to be issued, and they will be subject to potentially much higher full-risk rates. What agents can do now? Encourage policyholders to renew prior to expiration or within the 30-day grace period so they avoid having to purchase an EC and pay full risk rates. Look into costs of obtaining an EC in your area for potentially impacted policyholders. What policyholders can do now? Renew your flood insurance today. You'll likely save money by keeping your policy instead of letting it lapse and then trying to come back to get covered. If you want it reinstated, you may have to get an EC, which can be costly, and your policy will be calculated at full risk rates. Flood insurance does not renew automatically. Contact your agent to renew. Learn more at floodsmart.gov. This video is for general informational purposes only and is not intended to provide legal or regulatory advice. It is not intended to be a substitute for any NFIP or FEMA publications.